What's going on, everyone? Let's get into this one. A great video for you all. How to trade on one time frame so you're not a slave to the charts. It's going to be a great video, so stick around. So let's get into it. A very simple process that you can follow every single day where you're not spending hours on the charts. So GBPUSD, you know I'm a big fan. Right, let's just break this down a little bit. You can see price has been in an uptrend here, yeah? This is bullish market structure. High, 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 low, high, 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 low. You get the point. What you can see here now has been happening within price. We've broken out of a key area within the market, this higher low. And when you break out of a higher low in an uptrend, the market sentiment is then flipping from being bullish to bearish because you're taking out structure. So what you can do then is start looking for bearish momentum coming back into the market in key levels. So let's get rid of this. Just understand here now we have a lower high, okay, and a lower low. So this here is potentially the new lower high within a key area of resistance, which will be this, to create a double top. So what you can do, if you don't want to be spending hours on the charts, is use the 4-hour time frame to just find bearish momentum coming into the market where you can simply just place your entry, set your trade, and forget about it and get on with your day. So what we're going to look for is bearish momentum coming into the market. And I'm going to show you a few examples here going down, moving down as price moves. So bearish momentum is coming in. You could say, all right then, well, it looks to me like the price has flipped from being bullish to bearish. We've created a lower low. Is this going to be the lower high to create the lower low? Well, let's find out. So we'll place our entry at the close of the candle. We'll place our stop loss above structure. And then we'll go for our target. 1 to 2, 1 to 3, whatever it may be. Let's see what happens. Bar replay. And you should use bar replay if you're not using it. It'll cost you a bit of money, but it's worth the knowledge. So you can see price has been moving down. We've had a bit of a pullback. That's fine. It's just the way price goes. As you can see, we've had this exhaustion phase within the downtrend. And you can see bearish momentum coming back into the market. You could even say to yourself, well, if this is the lower low, maybe this is the lower high to create the lower low. I'm seeing price pulling into this area, like so. Where the wicks are, we're getting bearish momentum stepping in. Maybe the next candle will be bearish. You could take the chance. You could say, well, I'm going to put my stop loss safely above structure here. I'm going to go for my target of 1 to 2, 1 to 3, whatever it may be. And let's see what happens. We get triggered in again, or we're into profit. So this is 2 trade opportunities you could have took within this downtrend. Let's keep going. Let's see where price moves to. So again, we've had a similar scenario happen here. We've had this bearish move down. We've had the retracement, the exhaustion phase. Again, we've had the continuation of the bearish move with the exhaustion within the market. Let's keep going. Let's see what happens. So we're getting bearish momentum stepping back in. Well, just like we have done previously, maybe we could just put our entry here with our stop loss safely above this level, which would be our lower high. So a key area within the market, we're now anticipating a lower low. Let's see where we move to. Maybe we'll go for a 1 to 2 this time. I'm not sure. Let's see what happens. We keep moving. Alright, so this is 3 trades that you could have took, which all would have hit take profit by this point. So let's keep going. Let's see what happens. Now, I'm not even particularly sure what happens here. I'm just showing you some great examples of how market structure works, how price action works, and how you can simply place trades every single day using one time frame if you just use simple market structure. Let's keep going. Next one may be a loser. Let's see. So we're having the exhaustion phase. I can see a key area within the market here where we've had previous wick rejections from. Let's see how price reacts in and around this area. Interesting. So we've had a bearish candle from this area. Let's take the trade. Let's see what happens, whether we win or lose. I'm going to place my stop loss safely above structure, which is above these wicks here, and I'm going to go for my target. Let's go for 1 to 2 this time. 1 to 2. Let's see what happens. So we're in. Price is consolidating. We've had a downwards movement. Oh look, we're back to where we are today. This is a great example from last week into this week of how you could have placed 4 trades and still be in a trade today using one time frame. You would have secured 369% and 3, 6, 7, 8, 9, 10%. Potentially, if this one keeps on moving down, using a simple strategy, which is looking for price pulling into key areas within the market, double top, you're getting the bearish sentiment coming in, and you're looking for the continuation, create a new lower low. And again, look, a pullback into a key area within the market, looking for the continuation, and you get it. And with this example, again, you're looking for price to pull into a key area within the market with the continuation. And this one, this is basically just seeing the exhaustion phase. You're looking for price to create some kind of bearish momentum, the sentiment coming back in, the bears are back in charge, and you're just looking to get in the trade when you see momentum coming back into the market. It is simple, but of course I'm on the replay mode. Try and do this in the real markets, it's a bit more difficult. The point I'm trying to prove here is, if you want trading to be simple, you can use the key principles of how the market moves day in, day out. You can go and backtest this yourself, and you can find out how this really works and how simple it can actually be. Now, this is something which I am considering because I am working a job myself. I quite like the way that I trade at the minute. I like to get in a trade, I like to get out of a trade, and that works for me. I don't like to be sat in the trades for hours, but perhaps you don't mind that. So, look at this example, take it on board. Maybe you can backtest this, maybe you can live test it with very small lot sizes and see if it works for you. I hope you enjoyed this one. If you did actually like this kind of video of how you can enter trades, especially if you're in a job, etc., just let me know in the comments. More than happy to do more videos like this for you all. Take care, everyone. Have a great rest of the trading week, and I'll see you all in the next video.